Good afternoon, everyone. You're all very welcome to another market update here at the Alpha Capital Group. So today we're going to be looking at the broader market movements, factoring in, of course, from the volatility over last week, of course, central bank meetings, volatility into last week's close, and of course, looking ahead to the market movements this week. And of course, tomorrow, all important big CPI print out of the US, which of course a lot of market participants, traders will be watching and monitoring very, very closely into obviously the mid part of this week. So obviously yesterday, bank holiday in the UK off the back of the coronation of the new king in the UK, which meant that we had fairly subdued markets overall, particularly during the European session, and we saw fairly quiet overall trading day as a whole. Now, of course, today, this week, we are looking, as I said, towards the key data points. We are looking at price action, and of course, we will be looking at all of these different things collectively. So, without further ado, let's get to it. Let's start by looking at, I suppose, the key data events for the week ahead, looking at kind of the pivotal pieces of information ahead, of course, for the week. So tomorrow, really the big day tomorrow is going to be, or going to revolve around, should I say, the CPI data. So of course, looking at CPI, of course, as we know from the Fed last week, it is one of the most important data points in the US economy at present time. We're very much looking at broader market movements, factored in by the volatility associated to these fundamental events. So you've got your big four, you've got growth, GDP, NFP, unemployment, which of course came out on Friday, and of course you've got your central bank interest rates and CPI, which of course is your inflation data. And now, of course, tomorrow we do have two really important pieces of information to be focused on into 1:30 p.m. UK time when the data is released. I think it's 8:30 a.m. Eastern time, and of course that factors around 2 points, which is the core CPI month-on-month, year-on-year figures, kind of the headline figures, and of course then the figures excluding food and energy. So of course that is relevant in the sense that food and energy has been, as we've talked about it in previous videos, has been really the backbreaker to the economy, because of course rising prices means normal goods, luxury goods are more expensive than what they were, let's say 12 months ago or 24 months ago, 2 years ago. So tomorrow the year-on-year figure is expected to be 5%. So this is the first month where they are expecting the figures to be hopefully coming into like serious 4 prints. Now, the last figure came in at 4.97% on the CPI, which means that current inflation levels is now well below where the interest rates are. So, of course, looking at last week, 25 basis points again meant that the interest rates in the US went to 5.25%. So, of course, if we see tomorrow whereby inflation drops through 5%, let's say 4.8, 4.7%, that is a very, very good sign, because it means then that the idea of this kind of constantly decreasing inflation is going to be important, because it means then that it takes a little bit of pressure off the likes of the Fed and other central banks to not have to hold these current rates levels for as high as maybe some conceivably deem it to be necessary. Now, of course, along with that, you also have to factor in kind of future policy over the next 6 to 12 months as well, in the macro side of the situation as well. So tomorrow, very, very important from that perspective. The month-to-month figures, it's expecting to be 0.4%. So although the year-on-year is hopefully going to be coming down, the month-to-month it could be slightly higher. So that's probably going to be one of the important catalysts to determine whether are we actually starting to see those continued declines that we saw, let's say, through November into, let's say, March of this year. Lastly, then, I suppose when we look at the CPI figures, it's going to be relevant to excluding food and energy, because we know food and energy has been the outliers in the economy more broadly. 5.6 down to 5.5 month on month. It's sitting at 0.4%. So, of course, looking at that very, very, very closely. So that then turns our attention to Thursday. Okay, so on Thursday, we've got a raft of data out in the Asia session with Chinese CPI on Australian consumer inflation expectations. So again, kind of like what we have in Europe, and of course with the Fed in the UK, in the US with the CPI levels. So that is going to be one to be watching for those who trade Asia session. So if you trade the ASX in Australia, or you trade JPY pairs, or anything associated to kind of what would normally be attributed to the Asia session moves, like for example the Hang Seng. So there's some very, very interesting assets that could be quite volatile off of some of the data that's going to come out Wednesday night into Thursday morning with the Australian consumer inflation expectations and also the Chinese CPI. Now, on top of that, we also have Thursday, Bank of England, right? Of course. So Bank of England is expecting to follow ECB, follow RBA and the Fed last week, which all rose rates by 25 basis points to also increase its rates by 25 basis points. So the vote on Thursday is expected to be 7-2. So that's effectively saying, in a nutshell, that 7 of the 9 voting members are all expected to go by 25 basis points. So really you're looking for that kind of consistency across the board from the MPC to show that they're all kind of in agreement in terms of their objectives, where they expect interest rates to be. And of course, given that UK inflation has been one of the highest, if not one of the highest in terms of G7 at kind of 10-11%, it's going to be important because naturally enough, rates policy is going to be important by the Bank of England, but they also have to contend with kind of internal domestics like mortgage companies and stuff like that to be able to consistently hike to, let's say, 5 or 6% without too much of an erosion on or pressure on those mortgage companies as well. So that then brings us into kind of Thursday afternoon. So like always, we have our weekly jobless claims. We have Schnabel on the wires. We have Degundus on the wires. But broadly speaking, if you look at the economic calendar this week, yeah, of course, we had Williams and Schnabel speaking today. CPI tomorrow, Bank of England Thursday. But other than that, really not too much. So you've got a little bit out in Asia on Thursday night. You've got Bank of England Thursday. And then, of course, we've got weekly jobless claims Thursday afternoon out of the US again at 1:30. So not a massive amount of data. Of course, last week we had 3 central banks. We had NFP. We had a much more vibrant and kind of bullish week in terms of volatility in the market. So you have to understand as well that not every week, not every day you're going to get massive volatility. It's not always like a constant. It'll come, it'll go, and sometimes there'll be weeks or days where there'll be more volatility than others. But you're looking at next 2 days really being the pivotal trading days of the week. Wednesday off the CPI data, Thursday European open off the back of the CPI in China and Asia and Australia, and then of course Bank of England on Thursday afternoon into US Open as well. So there should be kind of some decent volatile data events coming out this week to kind of get the markets moving again, because you don't want the markets to be too quiet, because then they tend to kind of turn a bit stale. So no one wants that. So then kind of moving across to the price action really. So without further ado, let's get looking at the price action. I suppose the big talking point, as I said, over the last week or so has been this run up in the dollar. So we talked about it last week. We talked about that kind of run up between 101 and 102 in the DXY. Market dynamics very much back and forth, very, very choppy. But overall, we started to see that little bit of a break towards the tail end of last week, of course, off the back of NFP. We've seen market dynamics continue to move to the upside today and yesterday, back into this 102 level again. So we saw that sell off last Monday, last Tuesday, last Wednesday. We saw that reversal Thursday, Friday into the end of the week. Monday, Tuesday this week, we are seeing the DXY move progressively higher. Now that's obviously on a broader perspective. If you look at, let's say, a shorter perspective over the last few days or so, particularly let's say mid last week into the middle of this week, very, very choppy, very, very choppy up and down. And I suppose you have to look at it and say, well, from Monday of this week, we've seen a very prominent start to the week in the DXY. Euro USD has been slightly on the back foot. That into consideration as well. So I suppose without further ado, it's really just kind of watching that, because of course we have broken out. If you were to isolate the price action, let's say from Thursday, Friday into kind of where we are today, we've had very, very clear bottoms forming from a price action perspective, but we are also creating successive highs. You've got new highs consistently being created, but every time we break to a new high, we seem to come back into this value area down here between 101, 101.30. So at this moment in time, I would not be surprised if we saw a little bit of dollar weakness to kind of correct some of those movements that we saw Monday, Tuesday of this week, come back into this region down here. And of course, tomorrow, if we see CPI coming in sub 5%, let's say 4.6, 4.7%, you're going to see indices do well. You're going to see dollar weakness. So that's, of course, now relevant to look at the correlations of the assets. So if you're to look at correlations of the assets, the next key kind of important contributor is knowing how the different assets react under different information, right? So of course, if you know that, well, CPI, if it comes in better than expected, then or higher than expected, you know you're going to have to buy dollar, you're going to have to sell indices. If the CPI figure is lower than expected, you're going to be selling the dollar, you're most likely going to be buying gold, and you're most likely going to be heading into risk, like your indices, like the euro, hedged against that safer haven. So it's just about understanding that dynamic as well. But given that we've created kind of successive highs, every time we create a new high, we tend to come back into these ranges. So from my perspective now, I'm looking for this kind of short term to see if we can get back into some of these regions and then see if there's any sort of reaction from there this week. So of course, tomorrow with CPI, Thursday, Bank of England, and obviously the weekly jobless claims, it does give us some avenues to look at, not just from a fundamental perspective, but also from a price action perspective as well, because so often we've seen whereby a fundamental event is the catalyst for market moving. But if we can spot these price action structures, we can try and get in and hedge against that curve. Right? So next on the list, moving across to gold. Just switching it up ever so slightly before we look at the FX pairs and look at the indices for today. Volatility is still very much prevalent in the market. So of course, gold, if you're looking at that dynamic, we had that massive run up, massive sell off obviously on Friday off the back of the NFP. We have seen gold climb a little bit today. So despite obviously that massive correction in gold, it is coming back up again into this 2050 range. And if you're isolating tops from last week, let's say Thursday, Friday of last week, you can see very much so that gold is coming back up into this value area up here in yellow, and most likely is coming to, at the very least, probably mitigate and test some of this region when we start. This is their initial top, price action, price breakthrough starts to go sideways, and then we start to see it slide. Then we start to see it slide somewhere in around here, dips down into the low of the region, and then aggressively breaks through on Friday's data. Now, since then, we've actually seen a very modest recovery. So this area here should be something to keep an eye out on to see if there is any sort of reaction around this 2050 level, or whether markets just decide to progress higher and ultimately try and kick on and create new highs. And if it creates new highs, then you're looking at that bigger, broader, fatter structure where we have trends, breakout, back into value area, accumulation, redeploying another upside move, again back into range. Didn't quite get all the way back into this value area, but you can kind of see this big bad 4-hour area here around 2000 being fully mitigated, and the markets are off on a roll again. So keep an eye on that one. I think this 4-hour structure here around 2050 I think is going to be crucial this week, personally speaking. I think you're going to get a lot of volatility. So really just all eyes to see if there is any sort of selling bias off of this 2050, or whether we actually progress through. Now, if you're looking at shorter term order flow today, let's say you trade 15s or 30-minute charts, shorter term price action, you can also see the dynamic is still very much moving higher, right? So we get that very, very sharp correction. Price action now has fully mitigated this initial spike here at kind of 130. Mitigated that. So it's just kind of seeing how far does it progress. At this moment in time, gold is still gaining a decent bit of traction. Moving across the euro dollar, next on the list is really kind of pivotal because, of course, you're looking at DXY, you're looking at indices, you're looking at gold. It's some very, very interesting dynamics at play here as well. So Euro USD, obviously with that DXY volatility over the last few days or so, we are seeing obviously Euro USD come back into this range. So the big talking point obviously was last week. Consolidation continued. Throughout was fairly consistent, was fairly steadfast. We had that break. We had that initial breaking of highs again. Didn't quite take out this week. Ideally, last week when we were looking at, we would have liked to see price action come up, really to take out this kind of wick here. Let me just draw it out very, very quickly. Take out this wick and progress back down. Albeit we didn't actually really do that because, of course, we didn't take out the wick, but we did come back down. We did come back down to this clear value area here, this bottom structure on 4-hour, on 1 hour, and we've seen a fairly strong sort of reaction off it so far in the last. Worth keeping an eye, very, very choppy up and down, different cycles of price action up and down, accumulating volume, broader time frame structure, shorter time frame, break of highs, and back down to the value area, and you can see it there. Pretty clean mitigation of this 109.50 level that we talked about last week. Now, if you're looking at lower time frame structure as well on Euro USD, not something that I do myself too often, but of course it depends on the opportunity, depends on the structure's developing, you can obviously see that as well. Very, very clear stimulation to the downside, aggressive pullbacks, gets lower highs, sells off again, back into this 109.50 level, and we're starting to see a bottom. So you'd really be looking for some sort of inflection point here. So continued DXY weakness would be good. So of course, if that DXY comes back into some of those levels that we're talking about, that's going to be good for market dynamic, because it means then that the Euro USD is more likely to see a little bit of a bounce, because we know DXY and Euro USD are in fact negatively correlated. So understanding these kind of points is going to be important, just so you can put structure in your analysis. And that's the same whether you're trading euro, pound, whatever the instruments you're trading, having that understanding is really, really good. Okay. And that's kind of where we are in Euro USD. Just kind of really observing to see if there is any sort of clear market structure reaction. So far this season, seeing a little bit of a bounce. Next on this, moving across the table, is really setting the tone for a dynamic of kind of where we're currently at in that regard. Folks, just for this chart loads, lovely. Okay, so we are seeing broader cable chart is moving to the upside. So of course that is coming off of the back of continued pound strength. So euro pound is moving significantly lower and is broken through, or threatening to break through that kind of key medium term 87 level. We've seen pound, here's pound Aussie, pound CAD, pound Kiwi, pound yen progress very much to the upside, and we could actually do a pound video tomorrow. But of course, the dynamic at the minute is stable. It's still chugging to the upside. Those continuous highs, like we kind of talked about in Euro USD, like we talked about those short-term highs in TXY, is still very much moving higher. So at this moment in time, cable has seen order flow very much continue as well. Right, so we've broken through 125.50. We've taken it 126. In fact, we got to kind of 126.70. A bit of a correction today back to 125.80, and we're pushing on again. So if you look at isolated order flow on the shorter time perspective, again, clear order flow. The last little bit of a value area in around here. Price action rallies up, makes new highs, comes back down, reacts off of this region here, and we're starting to see that progressing to the upside as well. So really now, given that we are creating short-term kind of order flow here to the downside, you'd really look for that kind of continuation to the upside, take out at least some short-term highs, pull back again, and then start that continuation to the upside. So that is kind of something to be looking at, I suppose, in that regard from a market dynamic situational point of view. If you look at 4-hour order flow, as I said, it is very, very clean. Order flow, every time we make a new high, we are pulling back. And of course, if you were using technical tools like SIM, get those retracement points or those retracement zones of interest from wick to wick, you can see very, very nice retracement through the 618 back into 707786. The 707 is actually the square of 6. Into the 382. So it's worth kind of seeing how does this dynamic play out over the next, let's say, into tonight's close, and of course into tomorrow's US session open, into European session open ahead of the idea. Worth keeping an eye on that. On the 15-minute chart, you can kind of see that V-shaped bottom as well. If we kind of dial this out somewhat, tighten up the fibs for a second, just to kind of emphasize this as well. You can kind of see it there. Very, very clear buy-side imbalance. Creates your top, comes all the way back down. And of course, we mitigate this little 15-minute area here. This little 15 area here has been fully mitigated between 125.80, 125.9. We get that V-shaped bottom, and now the market is consolidating between pivotal fib areas. So worth keeping an eye on that one. And of course, as we progress lastly in the FX markets to the USD JPY, some very, very interesting moves here. So this is something that I actually mentioned last week in the video for those who's kind of watching along. Really is this kind of clear volatility, this apex structure where we had very, very volatile price action to the upside, creating that apex up and down. So we talked about it, apex up, all the way back down. I did say last week, keep an eye on this area here between 133.50, 134.00. You had a very, very clear 4-hour point of interest order block, which rejected perfectly. And of course, if we migrate to the 1-hour structure, you can actually see on the 1-hour structure here following the NSP on Friday, very aggressive break, taking out the internal retracements on the mitigation. So obviously this order flow here, lower highs, takes out, has been taken out, has been kind of engulfed, been taken out from a liquidity perspective, and now has started to consolidate in a sideways directional bias. Now, since then, market dynamic has been very, very kind of range bound and choppy. In USD JPY, we have seen markets move pretty much flat between 134.60 and 135.20. So very, very choppy, very, very accumulationary in this zone. What we can call this zone, or this kind of shaped structure. And at this moment in time, the price action is trying to break out. So we've tried to see price action break out. Not really any kind of clear breakout yet. It did try and break out today. It has popped its head back into this region. You can see multiple wick rejections there as well. So at this moment in time, you just like to see kind of clear reactions, whether we get a break up, back down, and an extension to the upside, or whether we actually just kind of create a fake break to the upside, come back down maybe into here, take the lows of this range, mitigate maybe price action down here in this region, and then start to springboard another recovery. But I can guarantee there's going to be some decent fireworks tomorrow. Moving across the indices. So we talked about the indices, we talked about the volatility in markets. Last week was definitely one for that. Of course, on the Fed interest rate meeting, my mind went blank there for a second. Fed interest rate meeting, we had a very, very clear selling in the indices. Did break monthly lows up here around 4070, 4060 level. We talked about it last week. Very, very clear break. Created that V-shaped bottom, came all the way back up to effectively take out where we were at Wednesday morning, Wednesday afternoon, just prior to that sell off the back of the FOMC. Now, since then, this week, the S&P has been fairly consolidationary, has been fairly flat. We had that rally, we had that sell off on Wednesday, we had that rally on Friday off the back of NFP. We've seen consolidation on Monday, very, very clear consolidation today. Of course, we talked about it, that little bit of a break lower. We have broken out of this short-term 1 hour range here. Price action is coming back up. So this area here, now I'm looking at kind of entries myself, personally speaking, but this area here around 41.40, 41.35 is going to be interesting to see if there's any sort of reaction here. Given that we've had consolidation, given that we've broken through this consolidation structure, we've created initial impulse, and seeing can the price action get back up to really mitigate this area of interest here. And that's really kind of the focal point that I will be looking at into tomorrow's CPI to see if there's any sort of reaction, any sort of chop or volatility, if we can actually see if we can get into positions in this market. That becomes a very, very nice opportunity. And of course, if that doesn't work, we then take highs and we were to break out through the upside. Well, then you're really looking at that upside continuation whereby we've accumulated, we've taken lows, we've taken highs, see if there's one kind of falter back into the value area, and then look for that impulse to the upside back into those upper levels of 41.85 and try and progress through 4200, which we know over the last 6 weeks has been a fairly strong and pivotal area for the market. So keep an eye on that one. Nasdaq has done absolutely nothing since our video last week. It is still navigating sideways. So the big avenue that we kind of talked about last week is how the Nasdaq is stuck in this 400 to 500 range. It is just moving lopsided. It's just up and down, different phases of price action in this broader accumulation zone as the markets look at it. Now, if you were to, I suppose, isolate things just even more broadly beyond that, you can kind of just strip this back for a second, zoom out for a moment. You can kind of see those aggressive breaks. So obviously, end of April, aggressive break, aggressive sell-off last week, back into kind of this value area. You can just see we came a little bit short on the wicks, didn't fully kind of mitigate this region, and of course aggressive U-turn back into local tops. So this area up here is very pivotal really over the next few days, this 13,300 level, to see whether it actually holds up. If you're looking at price action over the last couple of days or so, particularly let's say from Friday into Monday into Tuesday, we've been very consolidationary between 13,200 and 13,300 in these markets as well. So if you're trading Nasdaq, be wary of this very, very clear consolidation that's taken hold at an important level. So we could very easily see serious market reaction from there. And then last but not least, in the US markets is, of course, the Dow Jones Industrial Average. So moving across there on that one, actually just to make sure people can see that Nasdaq one, this is the Nasdaq accumulation that we're currently talking about here. I'm just going to make sure the chart loads. My screen is a little on the slow side. Lovely. Yeah, so this is exactly what I'm talking about here on the Nasdaq. This clear flatbed accumulation this week, Monday and Tuesday of this week, off of what is a very, very clear top formation, broadly speaking. So worth keeping an eye to see if there is any sort of break of this pivotal zone to the upside, or if we actually see another tumble in the Nasdaq, like what we saw last Tuesday and Wednesday, back into some of these lower levels, which brings back in 12.9, 12.950 on the Nasdaq. Now, of course, moving across to the Dow Jones Industrial Average, just before we kind of get any further on that, again, reiterates the volatility, right? So we talked about the volatility in the gold pair, we talked about the volatility in the dollar pairs, very, very clear movement, consolidation off of this pivotal zone, shall we say, this kind of pivotal area here in the Dow Jones, this kind of 34, 200, 300 area. Very, very strong reaction last Monday. Clear sell-off Tuesday, Wednesday, and Thursday of last week, taking out the structure. So, of course, if you can identify that as potential BOS, break of structure, clear break of structure, price action again, what does it do? It pulls back into this value area. So tomorrow, again, kind of like what you'd expect, we have had consolidation pretty much within these focal points for the last couple of weeks or so. We have taken highs, we've taken lows, we're back into the value area, looking to see if there's any sort of reaction up here, right? So you've got selling up here, you've got another bit of selling at the top of the consolidation, you've got short-term local highs on the week here at around about 33,700. So tomorrow will be interesting to see if there's any sort of spike, take out this imbalance, this sell side imbalance. We've taken the highs first, then we've taken the lows, see if there's any sort of sell-off to allow the price action to potentially move lower. So that is one to keep an eye out on, really. And of course, just trying to get kind of structure within the price action. Of course, the DXY, as I said, turns lower, we start to see that DXY really falter and continue weaker, then you're going to see indices rally. You're going to see the S&P rally, you're going to see Euro dollar rally, and you're going to see gold rally as well. All right. So last really then, but not least, is obviously the European markets. So the FTSE, the DAX, the Euro Stoxx broadly. Very, very interesting markets in that regard. So moving across to the FTSE first. So this is something I've been kind of watching myself over the last few weeks, and we've kind of talked about it in previous videos. Is the chop and volatility in the broader FTSE, right? So the chart is just currently loading. Give me 1 second, folks. Okay, so here, for example, right? So when we look at FTSE, this flatbed accumulation zone or consolidation zone at a key liquidity area, accumulates, breaks down, comes back up, almost fully mitigates it, sells off into this deeper runoff zone down here around 7,700. We're starting to see that recovery again. So if you're looking at structure, you've got short-term highs from structured break really down here, pull back up into this zone of interest. So this is kind of back into these kind of key zones that didn't quite fill the order block, point of interest, the value area, but did come fairly close to it, indeed. Sold off all the way back into the 61.8, and we're finding that little bit of recovery. Now again, it's typical of this sell-off. If we isolate the price action on the 1 hour chart, you can see what very, very, very clear order flow. Right? We've got lower highs, continuous lows, short-term highs, and then of course we get that aggressive break, taking out this low, taking out this short-term high, taking out this short-term high, marginally, came all the way back down to this value area here, as I said, around 77.20, 77.40. Very, very strong reaction, and the market is pushing higher. So at this point within time, it does look like the FTSE is trying to gain some traction to the upside. So we've broken through this trend structure here. We've broken the upside. We've come back down into this value area here, and we are looking to see, can we ultimately progress higher, take out this high here at 7,800, and really mitigate this sell-off that took place last week between Tuesday and more presently Wednesday off the Fed, and Thursday into that bottom, that V-shaped bottom. We start to see that correction. So you have to remember, these trends are oscillating in a sense that what goes up must come back down. So it's important to be able to identify those crossover points in sentiment. If you can do that, you'll give yourself a much better opportunity to be able to read and understand the price action. Of course, going back to the 4 hour chart, then you're really looking to see, well, can we then, given the price action sold off very aggressively, given that we've taken out these lows, we're starting to see that inflection point. Can we start to pull back against this? And really then you're then fine tuning the fibs again, the structure, that trending movement to see, well, you've got a very, very clear area here. And I suppose this 78.50 does become a very, very nice upside target to see. Do we get that kind of short-term recovery? And then, of course, can we sell off again to continue that next wave lower? So, of course, we've got bearish trend, break a trend, back up, mitigates key level, sell off starting to come through, short-term break from here, back down into the value area, starting to push higher again. So 78.50 really should be the next area of interest to see if we can actually start selling from, which will allow that next run-off lower back into 7700, into more likely 7600. Keep an eye on that one. Then last but not least, very quickly in the DAX. DAX, very, very horrible price action more broadly. So this is where we've been for the last weeks. We did break higher. We've tried to break lower. We found bottoms here. We've got this V-shaped bottom into an M-shaped top. Very, very, very choppy between 15,700 or 15,650, 16,000. Really looking to see, can the price action really break through this 16,000 level and progress higher? And I suppose that's going to be pivotal tomorrow. But of course, if the FTSE was to grind higher, the dollar was to go a little bit on the weaker back foot that we talked about, indices were to gain a little bit of traction to the upside, then there's absolutely no reason why we shouldn't see this DAX ultimately break through 16,000 and try and push back into this higher time frame top that is formed around 16,300. And you only have to go back to the weekly charts to really see that reflect over here from the end of 2021 and early parts of 2022. Similarly with the Euro Stoxx as well, we'll look at that very, very quickly as well. Clear run up, highs back into the value area. Structurally speaking, kind of like the S&Ps, did temporarily break through April month lows. Very, very quick reaction back to the upside, taking out this internal high of bearish trend. Clear reaction off of this V-shaped bottom today at 4,300, and the markets are rallying. So it does look like the Euro Stoxx is also gaining some decent momentum to the upside. And of course, as well, if you're looking at this, we've got a last little bit of selling here before we see this buy side imbalance. All this bullish imbalance into this short-term consolidation here and back down mitigates this zone almost perfectly to the point at 43.03 or 43.05. So we're seeing Euro Stoxx very much progress higher. I would not be surprised to see it revisit 43.50. And in fact, it really then becomes a case of, well, we've had bearish price action, we've broken through lows, but the April lows, we've then broken through this internal structure here, creating this top, back down, mitigating this area. So then we're looking to see, can the price action ultimately take this out, progress higher, and push back into beyond 43.50 into, let's say, 43.80, 4400 to where we're trading at the tail end of April. All right. So that's pretty much it for market update, everyone. I hope you've all had a great weekend. Best of luck this week with CPI tomorrow. Obviously, Bank of England on Thursday as well. So watching market dynamics very, very, very closely, of course, across the board, regardless whether the assets are trading. Most likely we'll see some decent volatility over the next few days. So, of course, as always, trade safe, and we'll see you all next time.